Morning, everybody. It's Dave again. Welcome. This video is going to talk about the U.S. dollar. We're going to we follow, or I follow the Power Shares UUP, a pretty good volume track, sort of the basket. So no specific sort of crosses to go through with respect like euro or whatever. But an interesting sort of piece of information to look at. The first thing about the U.S. dollar is historic U.S. dollar tends to be either great from a chop trade perspective or great from a taking on a trend trade perspective. And in today's example, I mean, you can really see how the 2D technology has offered a huge amount of value by flipping back and forth between sort of this trending environment versus this chop model environment, and potentially what we see, rating wise for this stuff going forward. So the first thing with the market right now is that we've gone from an exceptionally strong market, an exceptionally strong set of readings, back in late 2014, early 2015, to so if you were a long sort of the dollar bigger picture kind of guy, like your readings have now broken down. So, and you're not really that far off from the top. You're about 4 or 5% from the top at this particular point. So the bigger question is that the dollar going to strengthen? And yeah, I think at this point it's too early to sort of make that judgment, and I'll explain why. So the first thing we really want to look at is that I just want to take you back sort of in time of the past 2.5 years, and what clearly you can see is that a lot of red and blue, between the middle of 2013 and pardon me, 2012, 11, 2013, you can see, and a lot of profitable trading has occurring. So basically, with the U.S. dollar not really doing a whole lot trading within a relatively small band of like 4 or 5% from the on the Power Shares ETF, there was a lot of opportunity for traders to make money, and then everything started to change a bit back in July 2012. Um, we broke down below yellow, broke down below sort of our major dividing line between trend, follow the trend model versus invert that and go to sorry, the trend side of the model, and previously was the sort of chop side of the model. And then we saw that the market started to get back above yellow here, worked itself back into sort of a choppy type of environment, so an opportunity for people to pick up equity in here. And so when we break down below here, the option basically is that you then invert the system. So you start going against what the model is saying. It wasn't a huge opportunity for profit, a nice opportunity for profit. Again, as the US dollar began to flatten out back in 2014, late 2013-14, relatively low volatility period. You can see that, and so there wasn't a huge amount of money made from here to here by simply being short the U.S. dollar. There was a little bit made, and then there was an opportunity here to make a little bit of money. By the time everything was all said and done, though, everything jumped back into a pretty strong move on the upside, and we saw that down in here with our trend value readings that started breaking above the plus 30, which is generally bullish. So there was a really good opportunity at this point, as the system breaks down, to go into a short trade, pardon me, a long trade, and be long the U.S. dollar. And this model was long the U.S. dollar for probably about 7 or 8 months, all the way down to this particular point in here, offering a pretty good trade on the Power Shares ETF, and then once we break back above yellow, you can see that we're back into this really nice up and down type of environment, and that's kind of a very interesting thing for me to kind of look at and see. And so do I, because at this point here, the strength of that is very strong, and I'm not seeing anything that would indicate to me that are we about to have another one of these huge legs to the upside. Normally, as we started to see that here, we were already seeing some very robust, one directional buying, and that's not necessarily happening right now. So my viewpoint or outlook is that we're about to cross a dividing line into something that would indicate that we're likely going to spend the next few years in a much tighter range on the U.S. dollar. with a lot of volatility, chopping between different cycles. This particular cycle program has been very strong, so I wouldn't be surprised to see, the U.S. dollar uptick a little bit here and kind of lose a little bit of this, sort of 1 to 2 month cycle chopping. But the fact of the matter is that, we're clearly working our way up into a chopping process, and the outlook for any kind of major reversal on the trend, I think, is well away. So my outlook at this point is that I think the dollar's, and this ETF is roughly going to trade, within $1 to $1.50, from this level. So it's an ultimate range of maybe 2 to 3 tops, which puts it somewhere between 24 and 27, within those ranges, and those would probably be the outer band, and it's just a function of which way it's going to trend. We won't really get that sense until we actually begin to see. But based on everything we see ranking wise, and our quantitative or quant technique data, I mean, we have a 5 rating at this point on the dollar. It's at the top of its particular short-term cycle. Looks like it's about to close and start working itself lower. So right now we're short-term negative on the dollar. We think that the algorithm in front of you, which has generally been pretty successful when you start breaking above yellow, and it would be nice to be able to see this trend continue so that we can break above the dividing line, which is the bigger one right here. Once we see that type of behavior, then I think what you're going to see is some pretty good opportunities to trade the dollar. But I think at this point you're going to be range bound for quite a while.